crude oil prices are on a slippery slide, down for 5 out of the last 6 weeks in the U.S. Brent North Sea crude traded in London and West Texas traded at the NYMEX are both down about 20% from April 30th. And it looks as though the trend will continue. Craig Dismuke, chief economic strategist at Vining Sparks.
Every 2.5 cent decrease in gasoline prices is about a $2.5 billion increase in consumption power for U.S. consumers if it's held over the course of a year.
Good news for U.S. consumers at a time when they are taking on more debt and facing a shaky jobs market, but not so good for the energy industry. Nariman Baravish, chief economist at IHS.
There are parts of the U.S., Louisiana, for example, Texas, Alaska. These are oil exporting, oil producing parts of the country. So if oil prices come down, those particular states tend to suffer.
Currently, unemployment rates in these oil-producing states are lower than the national rate of 8.2%. Lower oil prices also reveal a troubling reality. The global economy is slowing both here and abroad.
You have the expectation that U.S. growth will be weaker, and so there'll be less demand. The same in China, and China right now is battling, how soft is their landing going to be.
Most people didn't expect the Chinese growth to be so weak. So that's made a lot of businesses take a bit of a pause, if you will, in terms of their hiring. They're not cutting jobs, they're just hiring more slowly. They're being a little more careful. And I think that may pass as the year progresses, in particular vis-a-vis China. We know China's already enacting a fair amount of stimulus, so Chinese growth could pick up.
But even so, the European debt crisis could offset any of that optimism, keeping demand in check and prices lower. Jill Bennett, Reuters.